Well, first of all, we had great top line growth, 9%, which actually is very good growth compared to most of our peers. I think the difference and the disappointment comes from the technology licensing business, where the current annual run rate of 1 billion euros is behind our target, 1.4 to 1.5 billion. We plan to get there, but I guess there is some nervousness as to when and how we will get there. That's probably the difference. Top line is really fine. We are taking market share, which is really important.
How can you get there? And what would you say to reassure those investors who have been disappointed by this slower than expected ramp up?
Well, network infrastructure and mobile networks businesses are doing fine. So we are really talking about the technology licensing business, where we closed a significant deal with Samsung in the first quarter. We have ongoing litigations with Oppo and Vivo, the smartphone makers. I believe that when we get through this cycle, we have all the possibilities to get to that 1.4 to 1.5 billion target range.
You note in the results this morning that you're seeing signs of a slowdown in customer spending. Can you elaborate for us on where you're seeing that slowdown?
Well, we have seen a shift in our regional mix. We had slowdown in North America, but we had really strong growth in India. India was 15% of our sales in Q1, whereas it was only 5% last year. At the same time, the mobile network investments in North America were down. There was quite a lot of inventory depletion in North America because the investments were really, really high last year, and our customers were building some inventory because they were uncertain as to we would be able to deliver because of the component shortages, and now they are consuming some of that inventory.
Pekka, what about margins? Comparable gross margin declined 300 basis points to 37.7% in the quarter. Operating margin dropped 270 basis points to 8.2%, and yet you're targeting a significant step up in margins according to your 2023 guidance. What's going to drive the margin improvement?
We had actually excellent margins in our network infrastructure business, 15.3%. The biggest difference really comes from the fact that, as I explained, that we have not yet closed these deals in the technology business. And the other delta compared to between first and the second half of the year will be the expected volumes in the mobile networks business in North America, where we expect that most of this inventory depletion will have been completed during the first half of the year, and then we would expect recovery during the second half of the year.
Okay, and on the bright side, you mentioned in your opening remarks categorizing the quarter that you are seeing market share gains. Can you give us a little bit more detail on where you're seeing those gains?
We are gaining a lot of market share in network infrastructure, in optical networks, in IP networks, in fixed access networks. But what I would very much like to highlight is one of our key strategic targets, which is to increase the share of enterprise customers in our mix. And there we had a really, really strong quarter, 62% growth. This was now a quarter where enterprise customers represented almost 10% of our sales. So this is definitely going to the right direction.
And 5G, you've clearly got a lot of investing to do in 5G. If we see a deterioration in the macro environment and you see weakness in some of the customer spending patterns, how could that affect the investment, your willingness to invest in 5G?
Well, obviously, we have invested a lot in 5G product development, and that will continue. We are following the market development very carefully. Nobody is immune to the macroeconomic situation, but what makes us still optimistic is the fact that when you look at globally outside of China, only about 20% of the base stations in mobile networks have currently been upgraded to 5G mid-band capacity. And this is one of the key KPIs we are tracking. So we are still early in the 5G cycle.
And you are committed to continuing to invest whatever you need to continue riding this 5G cycle.
Absolutely. Obviously, we will be managing our cost very carefully. depending on where the markets will take us. But absolutely, we will continue to invest. We have now taken market share continuously in 5G for the last 4 to 5 quarters. And we definitely plan to continue to take market share also going forward.